a show the other day, which essentially was suggesting that the problem with the financial pressures on people and housing is it's eating our young. In Australia, youngsters are getting, well, if they want to participate in property, then they actually have to get in hock and as never before. And look, frankly, there isn't a huge amount of things that they can do. You either stay out of housing, and a lot of people are, or you go in boots and all, but people are going in later. They're getting in more leveraged. And, the leech that housing is, and I think it is a leech. I think it's like a massive sort of blood-sucking animal on the body of Australia. And not only Australia, but particularly Australia. It really, you've got to ask the question, where do we go from here?
Yeah, that's a beautiful summary you've just put there, Martin. I mean, unfortunately, whether you're someone seeking to purchase a home or you're seeking to rent a home, you're basically between a rock and a hard place. So, when we talk about housing affordability, and I've had this, debate with people, online, they often say, "Oh, look, it's not that bad," but they're always talking from the perspective of someone who already owns a home.
Yeah.
When we talk about housing affordability, we're talking about the cost of a new entrant into the housing market. So I like to think of it, say you're a 20-something-year-old living at home with your parents, and you want to go out on your own. It has never been harder at the moment to purchase a home or to rent a home. And we can say that with data to back us up. So I don't know if you want to get straight into it, Martin, but there's an absolutely fantastic summary chart that CoreLogic, they're now called Cotality. I don't know why they call it that, but they've changed their name. And this was a snapshot. Admittedly, it is at the end of 2024. So we've had, a couple of rate cuts. But basically at the end of 2024, housing affordability across Australia, whether you're buying or renting, had never been worse at a national level. So, as Cotality or CoreLogic showed, the dwelling value to income ratio, this is for household income, was 8 times in 2024, which is an equal record high, and that's up from decade average of 6.7. It was, back in the 1990s, about 3. So the sticker price of a house is just ridiculous compared to incomes. The percentage of income required to service a mortgage was the highest on record at just over 50%. So we're talking about servicing a new mortgage for the median, someone on the median income. So the median price new home on the median income with a set, deposit. And so it was never more expensive to service a new mortgage. The number of years taken to save a deposit was at a record high nationally at 10.6. And the percentage of income required to pay asking rents on a new rental. So I'm not talking about the average rents across the housing stock using CPI rents. We're talking about a new entrant into the rental market was the highest it's been, the highest on recorded record. So, and if you look across the individual capital cities there, which CoreLogic, Cotality has put, if you're a Sydney-sider, which I'm sure a lot of people watching today, it's absolutely dire. I live in Melbourne now, and because Melbourne's had, prolonged period of weak house price growth compared to the rest of the country, the affordability is actually pretty good here. Relative speaking, it's not great at a macro level. But if you live in Sydney, it's terrible. If you live in Brisbane or Adelaide, it's terrible. Across most of the country, it's very bad. And this, unfortunately, is a situation I can't see improving much. Like, the government can tinker around the edges a bit with their policies, and which we can talk about a bit later, and that can reduce the years taken to save a deposit, for example. But the other metrics, like the percentage of income required to service a mortgage, yes, interest rate cuts will reduce that a bit. But as these policies and interest rate cuts push prices higher, the metrics aren't going to improve much. So it's going to be difficult for Australians entering the housing market in the next 10 years at least. It's going to be very, very difficult for those people, especially relative to history. So, it's a pretty dire situation we've got.
Yeah, and there's a couple of observations on this particular chart. Of course, I think this is based on household income.
Yes, it is. Yeah.
One of the big
median household income.
Yeah, but one of the interesting observations, if you look at now how two full-time workers are required, right? If you go back a couple of decades, you'd often find that it would be one part-time, one full-time, right? And in some cases now, household income comprises multiple jobs. So it isn't just maybe 2 jobs, but it's actually maybe effectively more than 2 jobs going into the household income pot. So this chart here doesn't actually take account of what it's done to people's work-life balance and everything else, right? That's the first point. The second point is, when you actually think about affordability, the age at which people get in to be able to buy a property is a lot later, on average 10 years later than it was previously. And that, of course, then has a huge on-flow effect, because you've got this massive debt burden later in life, which means that when you move into the retirement phase, you've still got the debt. So the consequences of this are way more than just, it's hard to get in. There's a bunch of stuff going on below the surface, which is really important.
Yeah, and also I'd argue that the quality of housing is arguably worse. So, people often talk about, the new McMansions and all this sort of stuff with, couple toilets and blah, 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 and all that sort of stuff. Well, if you actually look at it, the composition of Australia's housing stock is shifting pretty aggressively to apartments, especially in the major cities. So this is a dwelling price to income ratio, right? So as we shift more towards apartments, apartments make up a higher proportion of dwellings. So, the average quality of home, if you consider an apartment suboptimal to a detached house, is getting worse. Plus, the new housing developments are often further away, on the very fringes of a city. They're also on postage stamp size lots. So the size of the land now, the land parcels are absolutely miniature compared to what they were 30, 40 years ago. So I'd also argue that not only is housing getting more expensive, the quality is also degraded to a significant degree.
Oh, well, the quality of new builds is ridiculous. And I cover this with Edwin quite often on the shows. And, don't buy new is what I'd say, because quality of materials, the quality of construction, and all of those things are a problem. And it's interesting that if you look at the high-rise sector in particular, what you're finding is that the strata fees are climbing very much higher than people expected, because the remedial repairs and costs, which are now required, are much higher than people thought. So, in fact, economically, it doesn't make an interesting or a lot of sense. Now, there's an interesting little comment here, which is from Mr. Blister, and he said, from my understanding, 2 other Commonwealth countries with bubbly housing markets, New Zealand and Canada, have seen housing prices fall this year. Now, let's talk about New Zealand, because that's probably close to Canada, although I know we track Canada as well. Do you see Aussie doing likewise? Now, New Zealand, 2 factors. 1, they dialed back migration. 2,
Massively.
They've tightened some of their lending. They've loosened a little bit, but they've tightened their lending standards relative to what we're doing in Australia. So,
actually, there's 3.
Okay.
There's actually another one, Martin. They also brought in negative gearing reform. So back in, I think it was 2019, they basically did what Labor here wanted to do years ago. And that didn't actually help initially. So New Zealand, despite the fact they brought in negative gearing reform, basically quarantined negative gearing losses, so you can only claim it against your income, not you couldn't claim your property negative gearing losses against your income. You can only claim it against future gains, which is sort of what Labor promised for established houses. Despite that, New Zealand went through one of the biggest house price booms in the world after that policy came in, which is a bit counterintuitive. But then the Ardern government actually banned. They went the whole hog further, and they actually banned the ability to claim mortgage losses on your rental properties. So that was a huge change, and I think that's also taken a bit of steam out of the market.
Yeah, absolutely. And interestingly, the latest data shows that prices in New Zealand are back to where they were quite a few years ago. Affordability
pre-pandemic
is a little easier, but house prices and house trading volumes are still relatively low, because people are still stuck, despite the fact that New Zealand has cut rates significantly relative to Australia. So it shows you that there's an interesting connection between interest rate movements and the housing market, but it's not the only lever, right?
No.
The migration lever and the tax break levers are also very important to understand in terms of their consequential impact on property. And
absolutely, and we saw that during the pandemic. Sorry to interrupt, but when the Reserve Bank lifted interest rates from 0.1% to 4 point, what was that? I'm forgetting now. Oh my God, what did it peak at again? 4.35.
yeah,
yeah. Sorry, a bit of a brain fade. So it was a massive increase, 4.25% increase. We actually had prices fell initially, but then they rose, and it was when we had this massive rebound in immigration. The biggest 1 million people in 2 years. That then pushed prices up, despite the fact that we had massive monetary tightening, and the average cost of mortgage repayments went up about 50%. So yes, interest rates certainly have a massive impact, but they're not the only factor.
Yeah, absolutely. And the migration question in New Zealand is quite interesting because they did deliberately turn the dial down. There is some migration, but there's quite a lot of exiting from New Zealand too, right? And guess where a lot of those from New Zealand are coming to?
Australia. Look, I'd argue that the residents leaving New Zealand would tend to be more highly skilled, probably, more established. Whereas the people coming into New Zealand through the migration scheme tend to be your students and that sort of thing, and lower skilled and a lot younger as well. So they're probably losing a lot of prime age residents to places like Australia, looking for, better, basically more income, because Australia pays more.
Yeah.
And the cost of living, as bad as the cost of living here is, in New Zealand, it is off the charts. I remember about last year looking at a comparison of costs between Woolworths in Australia versus New Zealand, and the price of like milk and eggs and all that sort of stuff was insane in New Zealand. So I think people are, obviously coming across the pond because they can earn more money in Australia and basically have a better life, which is kind of funny to hear when you're an Australian and you think that it's gotten a lot worse here. I guess it's always relative.
Mm-hmm. And Cookie Boy asks about negative gearing. Should that be one of the things that are wound back? And other tax reforms, I guess my perspective is I think there is some fruitful areas to explore there, despite what Labor's saying. But it's probably not the biggest game in town.
No, it's not. But then again, if you look at what's happening in Victoria, so Victoria hasn't obviously got rid of negative gearing, but they've done a punitive tax regime on property investors. And as a result, Victoria's house prices growth has been so far below the other states. And I think if that happened at a national level, the impact wouldn't be as big, because when only one state does it, you get a flight out of that state into other states, right? But if we all do it, well, then you lose that option of just, I can just invest in Queensland, South Australia, whatever, WA instead of Victoria. But if there's a blanket negative gearing thing, you won't get as big an impact, because the alternative won't be as simple, if that makes sense. But regardless, I think Victoria sort of shows you the types of impacts you could have if you restricted negative gearing and, got rid of the capital gains tax discount, brought it back to its pre-1999 state, which is probably what we should do. And we would get some, obviously, less upward pressure on house prices, or, depending on the cycle, downward pressure. And it certainly would help in the affordability front, and also save the government some money too. Let's face it, it'd give the budget extra money. It's not a bad idea.
Absolutely. And just while we're talking, let's talk about Canada, because Jake asked about the migration. Of course, they did dial back migration in Canada, right? And one of the reasons why prices have actually moved the way they have. They also did some further, some further restrictions there as well. And as I was going to say, rents are also going in a different direction. So it shows you that there are levers that do have a significant impact on property prices if governments want to use them.
Yeah, and unfortunately, Australia's, as we'll talk about in a second with the policies and et cetera, is going the opposite approach. So instead of pulling the levers to make housing more affordable and making quality of life better, and basically getting off this Ponzi train that Australia's been on for 20 years, or 25 years with property, but with immigration 20, we're doing the opposite. So our government has no will to actually change things. And if anything, they want to pour more petrol on the bonfire and just make the situation worse, make our productivity worse, and ultimately make our living standards worse.